Good afternoon, ladies and gentlemen, and thank you so much for joining us for today's Coresight Conversation Founders Forum. Today, our special guest is Keval Desai, and with that, I will be handing it off to our CEO and founder, Ms. Deborah Weinswig.
Thanks so much, Anna. And welcome everybody to our Friday Founders Forum series. We are so honored to have Keval Desai, who is a good friend and general partner at InterWest. Keval invests in digital media, consumer internet, and mobile companies. He's also a recovering Google executive and a well-known angel investor in Silicon Valley. He's a board member at Kuyana and one of the early investors in The RealReal, to name a few, in terms of his experience in retail. He also has extensive experience in thinking about the digitization and the future of commerce, and we speak about that often. So lots to cover today. We're going to discuss how the current crisis may shape the economy going forward, how it's impacted e-commerce, eSports, etc., and then thoughts on these sectors going forward and the current state of the investment climate for startups. As always, we'll have a video live on our site in about 24 hours. And if you have any questions during the conversation or after, please just use the Q&A function at the bottom of your screen and we will address your questions. So first of all, Keval, thank you so much for joining us.
Thanks, Deborah, for having me. It's great to see you. And if I could just say, wish all the best of health to our audience and to you and your team. And thank you to everybody who has either themselves or through their family members been helping in this crisis on the front lines. Our healthcare workers, police, firemen. I have a brother-in-law who is a member of the NYPD, and I understand the sacrifices and stress that's going through our community right now. So thank you to everybody, and I'm really glad to be here.
Thank you, Keval. You really kind of start off with a good point, right? This idea that we're all coming together right now to solve a common problem. And are you seeing, right, retail has historically been incredibly competitive and, not really sharing information or insights. What are you seeing in kind of the boards you serve, the companies that you talk to? Are you seeing retailers come together a little bit more and maybe the tech companies to support them in this unique environment?
Yeah, the short answer is yes, and maybe I can put this in a little bit of a context. This will be my fourth recession in Silicon Valley. I got here in 1991, and there have been 3 prior ones, and they're all different. And this one looks to be deeper and broader in many ways, but I think with all of the prior recessions, as will be the case, I think, this one, it's an opportunity for reimagination of the economy, the way we live our daily lives. And I think what we've seen in the past is that in a time of crisis, people do come together and pull together with innovative ideas and, sort of all for one. So I think in the retail case, as we've been part of this weekly gathering with NRF and other executives and founders from the retail industry. And I think the industry has come together because the problems that affect us are shared problems. And I think they'll require shared solutions, whether it's closing of stores, shifting of consumer behavior from different categories in the short term, even when things start to reopen, which I think is about to happen starting next week. I think the problems we all face are very common, and I've seen a variety of forums and like the ones that you're hosting here today that have been sprung up to help entrepreneurs, CEOs, and customers, take a grip on the new normal. So I think Silicon Valley has always been an environment where entrepreneurship has been a team sport, and that's what I love about this place and what brought me here 30 years ago. And I've definitely seen a lot of collaboration, engagement. And I think we're going to see the fruits of some of that innovative thinking come to fruition in the not too distant future.
Well, I think there's an opportunity, and we'd love to hear some insights from your portfolio, but right, everyone's kind of taking a pause and can reflect on, kind of the trajectory they were on and the trajectory they expect to be on kind of post the crisis, recession, whatever you want to call it, pandemic. And we'll see, hopefully, some of these companies, and I'd love to hear what you're hearing from your portfolio, rethink what they're doing. Like you said, we hadn't done a digital event 2 months ago, and here we are. And it's, it's a new way to interact with people, in a very different way. What are you seeing from your portfolio companies in terms of how they're rethinking their business models?
Yeah, I think at a high level, what is about to happen, I think, is that we are going to move from an economy, a global economy that was built on proximity in general, whether it was in retail or e-commerce or education or health, financial services. I think there's a lot of business that's been done today all over the world that requires the buyer and the seller to come together in proximity. And I think we're moving away from that economy of proximity to an economy of distance, where things are going to happen between two parties when they're not in the same room or not even in the same continent. And I think in commerce, obviously that started happening 20 years ago with the first wave of e-commerce companies that really tried to bring sort of this distance into our realm. So what we're seeing is that in the commerce arena in particular, the post-COVID environment is going to be an accelerant to a shift that had already started happening 20 years ago. In other areas like sports, for example, the eSports phenomenon is fairly recent, but I think it's also a place where we're now seeing a lot of increased activity. And then education, for example, where over the last decade, people have tried a variety of different models for delivering education virtually over the internet. Some of those efforts, like MOOCs, have not been so successful. But I think now we're being forced to revisit those ideas. And I think the human behavior, at least in the short term, is going to change substantially to help propel some of these things. So, broadly shifting from proximity to distance, and I think the implications of that on our portfolio have been quite clear already in the last sort of 7 to 8 weeks that we've been looking at the data. And I'll give you some examples. Obviously on the retail side, it started with bad news where we had federal, state, and city mandates for sheltering in place and working from home. And so as a result of that, some of our companies that are e-commerce companies but have sort of an omni-channel model with some stores and retail presence, they were forced to shut down their retail operations. They were also, in many cases, forced to shut down their warehouses. So even though they're selling through their website and their apps to anybody in the world, if they cannot ship from the warehouse or have reduced capacity in the warehouse, that obviously impacted the business. The RealReal, you mentioned, one of our portfolio companies where I served on the board for a while, they announced publicly, they're a public company now, so they announced their first, pre-announced their Q1 report, and they talked about that issue of having reduced warehouse capacity. On the other hand, what they've also seen, and I think some of our other retail companies have seen this too, is that consumer demand, the traffic to the website and the mobile apps has actually stayed pretty strong, or in some cases even gone up. Obviously, people have more time on their hand sitting at home, and there is a lot of browsing going around. And in some categories, even the shopping is going around. So I think that what we've seen at a high level in the retail portfolio is, initially a negative impact from the store closures, reduced capacity in the warehouse, but then sort of early April, and certainly in the last 2 weeks of April, an increase in traffic and increase in shopping in certain categories. Some of the categories, I think the athleisure obviously are the obvious ones, but some of the categories are very surprising. We have a company, I'll just give you one example. I have a company called Outlier, which is actually it's Outlier.ai. It's an AI company that provides business intelligence to retailers to figure out, what's really happening with consumer behavior in their shopping data. And one of the interesting things that Outlier found for a large customer is that candles were in high demand. That people were all of a sudden in April, the buying of candles was spiking, and this was a complete surprise to their customer, but people were buying candles, staying at home. In many cases as a gifting, maybe for health and wellness, sort of calming presence in the home. So that's an example of certain categories that are not sort of the expected ones that we all hear about are spiking. I think another example would obviously be, dressing from the top, right? I think that you talked about this before, but with everybody on the Zoom, I think Zoom's become more of a social network now. It's especially it's not just the corporate calls, but also, people are doing hangouts and happy hours on Zoom. And so I think this idea of dressing from the waist up, certainly seen one of our companies from the lobby, they have seen an increase in that category. So I think it's, it's certainly a mixed bag, right? It started with pretty dramatic negative news. And I think as April has come around, certain things are to pick up.
Yeah, I have to say, it feels like from our perspective in about the past 7 days, the optimism is definitely on the rise. And that could be that we are starting to get the economy opened in kind of certain geographies. There's a lot of challenges around that from a retail, just store ops perspective. I don't know if you want to talk about how we think about reopening.
Yeah, I mean, look, you're the retail expert, so I'll give you sort of my Silicon Valley view on life, which is a very myopic view. I mean, I don't have, unfortunately, the benefit of the global experience that you have. So, what I've seen here is very, very tech focused and from a tech lens. And yeah, I think it's true that, again, sort of moving from proximity to distance is going to force a lot of technology solutions in terms of opening stores, right? So whether it's in the warehouse, for example, just starting the warehouse, a lot of automation in terms of using robotics, even using machine learning and visual imaging to do things that we previously used to do with people, so that we don't have to have a lot of inventory exposed to human touch. So I think we're going to see a lot of automation in the warehouse. Again, companies like Amazon started that almost 20 years ago, but we're going to see an accelerate of that even with the smaller brands. And then I think there is going to be a huge focus on health and safety, obviously. And I think that, one of the ideas that I've heard, which resonates quite a lot, is if you think about a retail establishment right now, there is this concept of a fire code, right? You have to comply with fire code, and if you want to operate a physical location, I think there will be something like a COVID code that's going to come around where you'll have to comply with COVID regulations. And that means, all the stuff we hear about, maybe a temperature check, maybe, obviously a reconfiguration of the store for social distancing, limited capacity, all of those things. I think you think about, you've been covering Asia for decades, and you think about contactless payments, right? I mean, you think about how prevalent, we've been talking about, mobile phone payments in the US for 20, 30 years, and it's never seemed to quite pick up in demand. And you look at Apple Pay, Google Pay, haven't really made a big dent in the whole credit card-based economy we have here. But I think this might be the forcing function that makes everybody wake up and say, what, if I can just use my phone to tap and I don't have to pull my credit card from my wallet, yeah, that's the way to go. So I think there are some things that are going to, again, get really sped up as a result of a dramatic shift in human behavior. So I expect a lot more just automation, even in the physical world, as we move around.
Yeah, no, I mean, I think that we're still, in some cases, right, with robotics and automation, I mean, there in some cases can be large CapEx associated with that. What we are seeing, which is really interesting, is this kind of, I think we wrote about it this past week, this outsourcing economy, right? So everyone spent the past decade, started when I was still on Wall Street, insourcing everything because they wanted the best talent. And now to cut costs and to have a more variable cost structure, right? They're outsourcing everything again. I have to say, I've been incredibly impressed with the grocery sector in particular, how quickly they've innovated. And whether it's curbside or pickup or, just communicating with your customers, we've also talked to several grocers about like assortment optimization, right? Because they want to make sure that they're in stock to drive consumer confidence. They also want to drive traffic. But it's been amazing to us in terms of just how quickly a sector that isn't really known for speed has really innovated. And where do you think, they'll, right, because they want quick wins, where do you think they'll invest in, 2020 as it relates to technology to propel their businesses further?
Yeah, look, I mean, we don't have an investment in the grocery space, so, but I'll give you sort of a general point of view on what I'm seeing from our portfolio. On grocery, the one, just for me as a Silicon Valley resident, what's been exciting to me is to see Instacart versus Webvan, which was, 20 years ago. And you sort of look at, Webvan was a sort of iconic failure, and in the .com era where people like, well, you guys sort of, Silicon Valley is, the common meme is, we always get the idea right, but the decade wrong, right? So, I mean, that's here's, I mean, what better example of two companies that are basically the same idea, 20 years apart, and by the way, same Mike Moritz, the same lead investor. And, I look at him as an investor and said, boy, like, how often does somebody get a second shot on goal, 2 decades of start and make it count, right? So, I mean, you see what's happening with Instacart. I think they just announced, I think, their first profitable quarter recently, or month, which is amazing that you see this, low margin business that everybody thought was going to be very hard. And, if somebody was going to make it happen, it was going to be Amazon. And lo and behold, you have this great Silicon Valley startup story that I'm really excited about. And I'm not an investor, but it's a great story. So I think, look, what's happening is increased use of automation and I think machine learning tools. I think we talked about machine learning, and I really don't like using the word AI because I think it's not really descriptive of what's really going on. I think it's really machine learning with lots of data. And look, I'll give you 2 examples. So this idea of forecasting, you talked about what's going to happen in 2020, 2021. I think one of the biggest questions that people have right now is, how should I plan for Q4, right? I mean, I think Q2, people know Q1 was January, February were great. March was very bad. And then April is going to be worse than March. And Q2 is, people have sort of written it off. And then Q3 is more like, okay, we're going to start coming up, but we don't really know how it's going to start reopening. So I think everybody's betting on Q4, right? Big question is, how do you forecast demand in Q4? And so I think what's happening with machine learning, if you think about machine learning is just to geek out a little bit, I mean, it relies on data, right? It relies on tons and tons of data. The same algorithms that were invented 30 years ago, all of them suddenly look smarter because there's a lot more data going in those algorithms. But the problem with that data is that if you look at historical data to project the Q4 of 2020, it's not going to be helpful. We have never seen, it was maybe 100 years ago that we saw a Q4 like this when we had the Spanish flu. So I think that one of the most interesting things that I'm seeing right now on the ground is that these new technologies in machine learning that are about predictive forecasting, that are not relying on past years' data, they're relying on real-time data. So this example of a candle, right? The fact that the candle category spiked up came from last 3 weeks of data. It wasn't looking at historical trends because historical trends are not meaningful right now. So I think you're going to see a lot more investment in technology that allows executives and founders of these companies to get a real-time sense of what is happening with the consumer, what's happening in the data. And I think the existing tools and business intelligence dashboards are not going to do justice to that because they were not built to look at the data in real time. So I think there's going to be a lot more investment in that. I think there is going to be a lot more investment in this virtualization. I mean, just to give you an example back from the Real, we talked about this publicly, their entire business is consignment, right? So they procure these rare luxury items from people's homes and then they sell them through their website and app. Well, if you can't visit people's homes, how do you procure supply? One of the things that they found, pleasantly to their surprise, was that video that, interacting with their consigners over Zoom works just as well as going to somebody's home to procure consignment. So they, have talked about how that might actually become a permanent change in their strategy for acquiring this luxury supply, that you don't really have to go and visit the client, the consignor in their home. You can do it remotely. So I think there's going to be more investment in these technologies that allow us to do business remotely. I think there's definitely going to be a shift in categories in the short run, right? I mean, I think that luxury, I mean, surprisingly, maybe not surprising, luxury is I think the hardest hit initially, but data shows that when the recovery starts, the luxury sector is actually one of the first to start recovering. There's some, Oliver Chen at Cowen talks about this, but he has done the study where there's a high correlation between the stock market and luxury, because the underlying thesis is that the luxury buyers, a lot of their assets are in the stock market. So as the stock market starts improving, those buyers feel more confident spending discretionary dollars. So I think that there's going to be a shift in the categories in the short run, but I think in the long run, it might be interesting that things might come back, at least certainly in 2021, that the same trends we have seen in terms of which categories do better in a post-recession environment, those trends might hold here as well.
That's really interesting. I think really helpful for a lot of the folks on the phone. what do you think in terms of just the overall investment climate for startups? You know, you advise many of them and you certainly know many of them. Number one, are they looking for funding? And number two, are they getting funding?
Yeah, the answer to both is yes. You know, there was we've heard about everybody's heard about this adage that, you know, recessions are tough. I mean, there's no doubt about it. People are feeling a lot of pain. You know, we can all personally identify it in this particular instance where we know people who have been. Now, I've had companies that have laid people off or put them on furloughs, but I've also had companies that are hiring. I mean, I think the NRF put out a stat that they have right now more than 1 million job openings that they're looking to fill across their entire client base. So I think there is like with all recessions, there is distress, but there's opportunity in the reimagination. And you know, there was one stat that I think the Kauffman Foundation, which follows entrepreneurship has followed it for decades, has a stat that did the study after the global financial crisis. And one of the interesting stats was that, you know, if you look at the half of the Fortune 500 companies, so more than half of the Fortune 500 companies actually started in a recession. So I think entrepreneurs know that. Entrepreneurs know that recessions can be a great time to start a business. The cost of building a company goes down dramatically. Talent is available. You know, hiring an engineer, and even in Silicon Valley, is always a hard thing, but it's a little bit easier now than it was before. So the short answer is yes. Companies are being started. They're being started with a new premise in many cases, with, you know, this shift from proximity to distance. And as far as venture capital goes, I think the venture firms have unprecedented level of capital to invest in early stage startups. I mean, I think unlike the last recession, I think that what has happened in the last 10 years is that venture capital as an asset class has been well recognized across the world as an asset class that institutional investors want to be part of, right? It used to be a very small bucket of somebody's diversified portfolio, and I think it's still a relatively small bucket, but it's a bucket that's here to stay. So if you think about the inflows of capital into the venture ecosystem, you see a lot of money coming in from all sorts of sources. So yes, startups are being created. I just invested in a company in March, and it's a new investment for me. And one of our portfolio companies just did a up round financing in April. I mean, the second week of April, they raised capital. In a very, very, I should say, interesting fundraising climate, right, where you would not expect a lot of funding. So startups are being created, money's being invested, and you know, I would be not surprised at all that the next generation of Fortune 500 companies come out of the COVID vintage, as we do say in the venture business. Yeah, and I think, you know, I'm happy to talk specifics if our audience have questions about it, but the short answer is if you are burning with desire to start a company that you feel is going to make an impact, now is probably as good a time, maybe even a better time than last year, because the cost of building the startup is going to go down substantially.
So along those lines, how should startups change their frequency of communication, their cadence with their investors or their clients? Like what advice do you have in terms of how they should approach this environment and, you know, the foreseeable future?
Yeah, and I would say I would bucket my response to that in sort of two categories. I think there are companies that are up and running at scale. If you're the CEO of a company like that and you have a board, and we have many companies like that in my portfolio, I would say that most of these CEOs, even the first-time CEOs who have never seen a crisis like this before, I think if they've gotten their company to a certain size of scale, they generally know what they're doing. And I think it's the board's responsibility to be very supportive, very empathetic, provide them with the resources that they need, but do it at their discretion. So I don't expect my portfolio CEOs to giving me a daily or a weekly, even a monthly update. I know what they're doing. If they need my help and, you know, they call me or they ping me or text me, whatever, and I'm there for them. And we've done that many times. But I think the best thing I can do for my CEOs right now who are operating at scale is to give them time. I think time is a luxury that people don't have right now. These CEOs are very busy. They have a lot of challenges on their hand. They're juggling many balls in the air. And so I think the worst thing I can do as a board member is to interrupt them and ask for status updates. So I would say my advice to those, that category of CEOs who are operating at scale is keep doing what you're doing. You know what your business is like. You're doing a great job in a very tough environment. Definitely reach out to your board members, investors for help, and be very specific. You know, one of my portfolio CEOs last week texted me and she said, look, I need your help with my landlord. We're having discussions about rent and I need your help, and go do that. And the same person 2 days later said, I need help with our bank. You know, we have this revolving line of credit and it was set up under a different circumstance, a normal circumstance, and now things are not normal. We need to change some things. Can you help me? So those kind of precise action items, I think entrepreneurs should give their board members action items. I think a lot of times CEOs forget that the board is really working for them. The board is a resource. The board is, yes, the board's job is to provide some, you know, it's provide some oversight on behalf of all shareholders, but ultimately the board is a resource for the founder and they should not hesitate to reach out. So that's one bucket. I think for companies that are just starting, maybe they've just gotten their product market fit or initial traction, I think there the interaction could be much more frequent and in the context of a brainstorm. It doesn't have to be a very detailed status update with metrics and dashboards and you know, a ton of data. It just could be, hey, you know, we talked to 10 different customers last week and we heard 2 different things, you know, which one should we really pay more attention to? Let's have a brainstorm on that. So I have those kind of discussions as well. Those are much more informal, more frequent, 2 or 3 times a week with the same founder. But I think my view is that in general, right now is the time for investors and the board to be very empathetic and be very supportive and recognize that our CEOs are operating under a lot of stress and a lot of different challenges. And they don't need to be spending time in long board meetings, you know, giving updates on their 12-month plan. Nobody has a 12-month plan. And if they have one, it's not going to be right. I mean,
12 days.
I don't have it. 12 days, yes. And in fact, that's a great point, Deborah, because I mean, our companies certainly in the commerce, B2C companies are operating on a week-by-week basis. We have companies that have a cash flow budget. That's a weekly budget that goes on for the next 4 months and then no visibility beyond that. And that's okay. I think as long as we have liquidity for a couple of years, I think operating your business on a 4-month window is completely fine.
So kind of tying a few things together, right? The special kind of DNA of Silicon Valley and collaborative nature of the companies and the people who are there, and obviously a very challenging climate. Are you seeing companies work together in unique ways? And I don't know if you can give any specific or even some more general examples.
Are you talking about companies sort of in our portfolio working together or companies across geographic boundaries? You know,
I think just any examples you have in terms of if it's in your portfolio or even just, you know, kind of more from what you've heard, because we're just like, we've been very, I think, you know, very involved in the procurement of PPE under Retailers United. And what's been amazing is just, you know, kind of everyone kind of literally across the world who's kind of jumped in to assist, and whether it's like medical grade or, you know, kind of for the consumers, just making sure that like the economy can reopen, right? So like our whole motto has been like save jobs, save lives. And what we're seeing is kind of like unprecedented, you know, kind of, you know, and one person will find out that you're involved in this and like you get 10 introductions, you know, in my whole career, I've never seen anything like it.
Yeah, I think and I think that's a great point. I think what you're talking about is that this is a crisis that is very different than any prior ones because this has affected the entire world. Right?
That's right.
And my mom lives in Bombay. She's 84 years old, and you know she's staying at home, locked up. The whole country's locked up there, and I'm staying in San Francisco with our family, and we're locked up. And you know, I mean, I think this is a true global event that in some ways has tied all of humanity together, right? And so you see this very spontaneous outreach from all over the world. You know, our portfolio is mostly focused in the US and even within the US, sort of in Silicon Valley. So we don't see the global perspective that you see, Deborah. But I'll tell you this, I mean, in our portfolio, I mean, we have this, one of my theses, as you know, for a long time has been this marriage of consumer behavior with infrastructure technology. I mean, I think my sort of general investment thesis is that every decade or so, we get to reimagine consumer habits. Habits don't change. We're shopping, we're watching videos, we're commuting. These habits are centuries old, but they get reimagined every decade with new technology for a new generation of users. And so in our portfolio, we have consumer companies and infrastructure companies. And what I'm seeing right now is that, I gave you this example of this company called Outlier. Now that company, the machine learning company that's helping with forecasting, seeing sort of these unexpected trends, they've been helping The RealReal, which is a consumer company, for quite some time about how to notice unpredictable shifts in consumer behavior, right? Things that are out of the norm, hence the name Outlier. So I see a lot of companies in my infrastructure portfolio helping the consumer companies and then sharing those lessons out. I have to say, I mean, we talked about this sort of problems with rent and capital leasing. I have to say all stakeholders in Silicon Valley, whether it's Silicon Valley Bank, Co-America, people who've been banking with startups, landlords, I think everybody has been very cooperative. People have come together and understand that this is a collective problem. So, you hear in the news about a lot of this negotiation or tension between landlords and tenants. In my experience in our portfolio, I haven't seen that. I've seen a lot more collaboration and frankly, a desire to work together, knowing that there is a day after tomorrow, right? That we're all going to try and survive and get to that other side and then flourish. And at that point, there'll be a lot more to go around between all the stakeholders.
Great. No, that's super helpful. We've got the poll results. I want to make sure we get through them. So I don't know if it's what I would have expected. So number one, did you purchase fashion apparel or accessories online in the month of April? Half did and half didn't. But I do think
half did. That's pretty good.
I know. I think, like I said, the past week has like, I've even heard people like, they're like, oh, go visit this site. They've got this on sale, or, there's this great product. So I feel like, kind of this, the sun is getting brighter, if you will. And we're starting to kind of, emerge from our cocoon and understand, I think, but that is very interesting. Okay, the next one is too, if you did buy fashion apparel, what was the order value? And, we had, kind of half said yes and half said no. And then how comfortable will you be going to a retail store outside a mall in Q4? So 57% said somewhat, 29% said very comfortable. It's interesting. I talked to somebody in Israel today, and they had, Israel opened, and they said it was packed, right? Like the stores are huge lines from a social distancing perspective, but it's like everyone wanted to get out and like, celebrate. I keep calling it like the beginning of the world party, right? And, and support retailers and restaurants. And so I don't know, I mean, what's your feeling in terms of how we open up and, where do, consumers, and the other interesting thing, right now, because eating out is more expensive than eating at home, for those whose incomes haven't been affected in some ways, right, they haven't been spending money on services, they may feel, they may actually have more, kind of cash on hand, but they also may feel, because the stock market hasn't been that dramatically impacted, they may feel better in terms of spending. I don't know, what are your thoughts?
Yeah, look, I'm no health expert, so we got to rely on the experts who are saying, most of the experts that I listen to say, look, it's too early to start opening things. Now, I think there are views on both sides of that, and so I think we're going to find out in real time what happens with these sort of experiments that are going to happen across our country. I think I heard just this morning one data point, it's just one, but so I think Georgia opened up some of their restaurants, and with reduced capacity, so 25% of seating capacity. And I was on a call this morning with some analysts, and they said that on a week-over-week basis, the first week was quite strong, that people came out and ate in this restaurant, sit-down meals. Now, That's one very single data point in a country of 350 million people. So I think we don't know. I don't have a, I don't have a crystal ball, so to speak, about what happens in the future. What I do believe we need to be prepared for is a lot of flexibility. I think that it's likely that we'll get a second wave or multiple waves of the virus coming back. How do we deal with that? I think that one thing I always like to share with my portfolio founders is, we can't predict the future. All we can do is be prepared for whatever happens. And so I think, you look at a company like Quiana, for example, which is one of our women's fashion brand, it's a vertically integrated D2C brand. And I think the things that they've done from the very beginning of their business model, not just in the COVID era, is that they've had a very nimble supply chain. They have this mantra of fewer, better things. I mean, that's been their sort of philosophy from the beginning. And I think when you have a fewer, better kind of a mindset, which feeds into sustainability and the idea that you're not having too many different SKUs in any given year, you're ordering in small quantities, I think it gives you a lot of flexibility. You have an omni-channel business model, so you're not reliant on retail. So I would say, look, the mantra is flexibility. I think all we can do as entrepreneurs and investors is give ourselves a lot of options, and the optionality is going to be key going forward because it's going to be very hard to predict the future. And if you have a global business, I think the world is, China is very different already, as you know. South Korea did a fantastic job of mitigating the virus, and the economy doesn't seem like got impacted that bad. US is very different. So I don't know what the future holds. I know that it holds a lot of uncertainty, and I think the only solution to that is flexibility and options on our end.
All right, so we're going to turn it over to audience Q&A. We'll try and get through as much as possible. For those of you who haven't yet had a chance to ask, please drop your question in the Q&A chat at the bottom. Okay, so we'll start here. Can you discuss investors' renewed focus on profits with COVID and how CEOs are dealing with this? Well, and also, Keval, on top of that, the Main Street lending, you have to have positive EBITDA. So that's also very interesting.
Yeah, sorry, I missed the question. Impact of COVID in what context?
Discuss investors' renewed focus on profits with COVID and how CEOs are dealing with this, right? Since many startups don't have profits.
On profits, yeah. So look, this is the age-old debate, right? Growth at what cost? And I think that typically in Silicon Valley or early-stage investors, you want to be growth-oriented. We're investing in companies whose whole premise is that they see a new opportunity in a large market and they want to go for growth. So I think that that's always been the case. I think what's also always has been the case, but maybe not talked about broadly, is that growth without good unit economics has never been a good idea. And what I mean by good unit economics is specifically contribution margin per unit. And the unit can be anything. The unit could be an e-commerce order. The unit could be a SaaS customer that you acquired. But it's important to have positive contribution margin per unit, because obviously, if you have that, then scaling the business makes sense, because eventually you will have a lot more profit from all your units, and then you'll pay off your fixed costs. So I think the short answer is, I don't think investors are looking for profitability today, certainly in the private markets, but investors are looking for a business in a big market that is growing or has the potential to grow with profitable unit economics. So I would focus on unit economics a lot more as a startup than on EBITDA, which public companies tend to. I think you talked about the Main Street lending program. Absolutely. I think that, again, I think there are a lot of these programs that are set up with norms that were okay in normal times. Yeah. And I think these are not normal times. We have to sort of just remind ourselves every day that we're living in very abnormal times. Yeah. But I have to give the government credit where credit is due. I mean, you look at the PPP, the payroll protection program, very controversial. The first tranche got exhausted very quickly. Second tranche has been now approved. But look, there are 3 portfolio companies in my portfolio. They were all impacted by COVID. One company had to lay people off, furlough some people. Other 2 were impacted on the business, but they were able to get some relief from the PPP. They got the loans, and they're using them for rehiring some of those people, which is what the intent is. They went through 3 different banks. So there's not like any one bank had sort of a lion's share here, at least in my portfolio, and they all 3 got them. One was a small community bank, was a very large national bank, and the other one was a large but regional Silicon Valley institution. And all 3 of them got it, and they got it in a relatively short amount of time. And I think for the federal government to be able to disperse billions of dollars, hundreds of billions of dollars through whatever system that they had to use, I think it is something that I feel very grateful about. And I feel good that my taxpayer dollars are going to help these small businesses that need them right now.
Yeah. No, absolutely. It's been impressive.
And these companies are not profitable, by the way. I mean, these startups are not profitable. So that's the nature of 99% of startups. And they got the money. So their profitability was not a criteria. It was just that, were you impacted, and are you going to be able to, pay your employees and keep them employed? So I think that was a very good idea, and it's working reasonably well from what I stand.
Yeah, no, you're absolutely right. We've got a few more questions to get through. How do you think about investing in overseas brands for expanding their business market in Asia with omni-channel strategy and operations?
Yeah, so again, our business, we have looked at companies only in the US. I think we do have companies that sell to overseas customers. I mean, the Real, for example, sells now in, I think, more than a dozen countries. You can buy from anywhere. I think that there is going to be a necessity that for US companies to look for an overseas audience as customers, right? I mean, if it is true that parts of East Asia and maybe Asia at large is going to recover faster from this crisis, and their economies are coming back online faster than North America or Europe, then I think it maybe is an imperative that we look at that audience, that market, for demand. And I think that you're going to see, in some cases, US companies that had not thought of global customers until now are all of a sudden going to say, wait a minute, how can I do to get you and I have talked about this before, how can I get my product to be visible in outside the US, in particular in Asia? And there are marketplaces or wholesaler deals or any kind of, maybe pop-up shops that you can put up quickly and get your inventory out there. I think there will be different attempts at reaching a global audience.
Yeah, I mean, what we're seeing some really interesting changes in business models as it relates to the China marketplace, and in some cases just trying to help out small US retailers and brands, and models where they're just buying the inventory, right? It's not even necessarily kind of yet you have to put it in a warehouse. When the customer buys it, they buy it. And so we are seeing all new kinds of models spring up, but some of it is just in the face of necessity. And for some of these brands, it will be their lifeline, right? You have a consumer in China right now who's stronger than you would expect and who is consuming. So it's been really interesting. And there's been, I think a lot of the positivity is, and it was a question I wanted to ask you. I want to make sure I get it in before our time's up. But this idea of, kind of distance, do you think that changes positively or negatively the globalization, right? The fact that I don't necessarily, right, I had calls late last night, right, with China. I don't need to get on a plane necessarily, nor is it expected anymore to build that relationship. And we're actually meeting new people and building relationships over Zoom.
Yeah, I think it's going to be, it's interesting, right? We talked about this phrase, the global village, which, Marshall McLuhan coined decades ago. And it took decades to get to that, at least in the e-commerce retail space, where, you can now go on Amazon or Alibaba and buy from anywhere in the world. My wife and I, we just shipped something to my mother in Bombay last night on Amazon, and we were in San Francisco, and it's going to arrive next week at her house. And that's the global village of commerce that we're talking about. I think what is going to happen, though, is that you're right, that proximity of having to go and get on a plane and fly to make a business deal, I think we are not going to do that in the short term. I think we're going to be fine doing what we're doing over Zoom or other virtual means. But I do believe that the global demand, that global marketplace, is going to stay intact. I think that the demand is going to stay there. The idea that I can buy from anywhere in the world, anything I want, is going to be fine. I think that supply chain is going to get reimagined, though. I think there are some geopolitical factors that are going to come into play. You look at we have an election coming up in the US this year, and I think you're going to see a lot of, the China tariff argument that was sort of people thought it was resolved. I think maybe not so resolved in the new context. So I think there are some geopolitical factors that are going to impact how the supply chain gets routed. And so what I think, you think about the oil shock in the early 90s, the first Gulf War, the second Gulf War, what that led to was a rethinking of the US supply chain for oil. And, the shale business came up in the US. And so US became an energy independent in some ways, a country. I think there is going to be something like that, where, like, for example, healthcare. You look at the supply chain of healthcare, the fact that we cannot get enough swabs in America for doing testing. I mean, that's a mind-boggling thing. And I think we're going to see that certain industries are going to say, wait a minute, we can't have these kind of crisis response plans in the future. We got to be better. So the supply chain is going to maybe come on land, come on shore.
Yeah.
I think e-commerce, look at Kuyana, never had a supply chain relying on China. It was always scattered across the world in other places. So I think you're going to see some innovation in the back end. The front end, I think, is still going to look unified and global in terms of demand. So I would split supply and demand and look at them separately in terms of how globalization is going to impact them going forward.
Well, what we found really interesting, and like I said, everything's kind of happening in real time. I always, right now I'm saying every day is like a new year. And the amount of production we're already seeing move into New York is unbelievable, right? Like, and a lot of it's automated. And there's micro factories that have popped up, and the people are able to get in, especially to make masks and other PPE. But it's all happened in a span of less than 8 weeks, and I will say, some of what's been really interesting from China's, some of the equipment that's needed to make the N95s. We've seen a lot of that equipment come to the U.S. and it's all been seamless, and that to me has been like that is where we've seen true kind of global collaboration. And yeah, I think you bring up. And on the supply chain side, right, where so much of it was physical, right? We had to like look at the product, we had to look at the fabric, right? That's all moving digitally. So ultimately, maybe we have kind of better product, better margins, because we have more points of view. It's not just the two of us looking at the product. It's an excellent point, and one we should definitely explore further. All right, there's a lot more questions. So you talked about, when we kind of talked about this, the idea of commerce moving from near to distant. What new tech can enable this?
Oh boy, that's we can go on. That's a separate webinar by itself. But
I know.
I think obviously as an investor, I'm so excited by that particular question and it's a great question. I think about it every day. I mean, look, the technology, it's going to be a full stack from the front end to the back end and everything in between, because we talked about some examples of using machine learning to do better forecasting, looking at real-time data. I'll give you one company that I'm not an investor in, but I love the company, and we've talked about this before. Obsess, this Obsess AR, is obsessar.com is the company, and Obsess is started by Neha, who's a friend and colleague from Google days. And what Obsess is doing is, essentially building a retail front end. So you have a store experience, and it's a 360 view experience. So you're on your browser without any kind of new physical device. You don't need a VR headset or AR headset. It's just your browser. You can now get a very immersive experience of walking into a store, or being part of a runway show, or being inside a building that you're looking to maybe buy an office space, maybe not in the near future, but someday down the road. So this idea of making it feel like you are there. I think you talked about the supply chain and you looking at the equipment, testing it. I think part of it is the human psychology of feeling that you want to be there in the moment.
Yeah.
And so I think Obsess is a company that's allowing you across verticals to be in the moment. They put up a store for an art gallery where you're not going to go visit an art gallery anytime soon, but you want to still buy art, and you want to feel like you are there talking to the curator. So I think technologies that provide immersive experiences, technology that provide machine learning for deciphering real-time data, more automation with, for example, we talked about the real case of doing virtual consignment meetings. Those are all areas that we are very excited about. I have some investments there, but that's going to be a big cycle. I think that's going to be the next decade of innovation, right? That comes out of this crisis, where we are going to buy local, but with distance, in a way, right? That doesn't mean that we have no human interaction or no community? I don't think so. I think we're still ultimately very social, communal people. And we're just looking for things to do it in a very different way that doesn't impact our health and safety, right? I'm very excited by it. I mean, I think that's, you know, more to come on that front as our companies develop and start showing their products more publicly. But ton of innovation. And I think that's where the opportunities for the entrepreneurs.
Great. I'm going to ask you one last question, just in the interest of time. What are the crucial factors to evaluate for such investing targets, popular brands in the West, but not mature in the East?
You know, you're the right person to answer that question, Deborah. You have more on that than I would.
Maybe we can turn it though, just kind of as you're looking to invest now, have the criteria that you're looking at. So what do you typically look at, and has that changed?
Yeah, that's a great one. So, you know, I look for four things, and in that order. So the first thing for me is, how big is the use case? And what I mean by that is, whatever that product or service is, can I imagine 1 billion people using it someday? It doesn't have to be today, obviously. It could be over the next 8 to 10 years. But can I imagine a very large use case being reimagined with this product or service? So, you know, some people call that a market, but I like the word use case. I think it's more precise. It talks about who the user is, what the benefit of that product or service is to that user. So the first thing is, how big is the use case? Second is, obviously for me, the founder, the leader of the company, who are they? What is their vision, capability? It's not just vision, it's also execution. Can they hire top people? I think that's one of the key things I look for. I think, you know, the saying goes, A people hire A people. And I think we look for people who are going to be able to attract tremendous talent, and a lot goes into that. So that's number 2. And number 3, you know, I like to say, you know, why now? What's changed in the environment that allows a startup to challenge an incumbent? I think these big use cases, by definition, have large markets that have existing incumbent companies serving the needs. So what gives you, the startup, a right to enter that market? I think usually the answer is something has changed. A new technology has come on board, like cloud computing, for example, or a new business model, like marketplaces, for example, which didn't exist until about 20 years ago. Or in this case, boy, a massive shift in human behavior caused by a crisis. So I think the why now for the next generation of startups is quite easy to answer. It's like we're already living it. We're living the why now. And so I think that's the third one. And the fourth one is, we talked about earlier, can I envision a profitable unit economics business model? Not a profitable company right away, but you know, as soon as you start getting some revenue, is it going to be on a profitable unit economics basis? But because if not, then there's no point scaling that company, right? It's just a faster way of losing a lot more money. So those are the 4 things for me, you know, big use case, a great founder, why now, and then a profitable unit economics. None of those things have changed in this crisis. I think they're the same. It's just that the answer to the why now is much easier to understand today. Right?
Okay, there's actually one more that came in that I really want to hear the answer. So
Okay.
I'm going to ask it and then we'll wrap up. So how will it change going forward? And if you're looking to make investments now, if you haven't met the founder in person?
Yeah,
right.
Great question.
Yeah, I thought it was a great question.
It's a brilliant question. And I think it's like, you know, the analogy I would use, it's a bad analogy, but it's the one that comes to mind. So I ask for forgiveness up front. It's dating, right? It's how are you going to meet the relationship between a startup entrepreneur and the first investor or the early investors? It's a long relationship. I mean, we invested in 2013. I stayed on the board for 6 years. I'm still an investor. I texted Julie this morning about something. So it's a 7-year relationship. With Kuyana, it's been 6 years. So these are long-term relationships that go on for a decade or longer. So it is kind of like, you know, it's kind of like finding a partner that you're going to stick around for a long time. So how do you do that when you can't get to know them or spend time with them? So I think my answer to that is, we have to spend time with each other to get to know each other. And it's about understanding how each of us think about opportunities, crises, people, products, business. So there has to be a lot of interaction. does that interaction have to be physical? I don't think so. I mean, we don't have to be sitting, like, I feel very close to you right now. We've talked a lot in the last week, Deborah, right? And it's been fine. Now, we did meet in physical life initially to develop that relationship, but I think it's going to be different, but I don't think it's a showstopper.
Okay.
I mean, as I said, I invested in a company in March. I did meet the founder once in a physical world. It was towards the end of last year. But then the rest of the interaction through January, February was not because of COVID. It was just that we got busy and we were talking online for the most part. And we had a bunch of Zoom calls. Actually, we had a bunch of WhatsApp calls in that case. So I think it's going to change, but I don't think it's going to stop people from partnering with each other and building a partnership that lasts for a long time. I think Zoom and other mediums like that are going to be important. I see a lot of innovation coming in this. Zoom is, I think, a horizontal platform, but I think one of the things that I'm excited about is like verticalization of that. For example, if I think this whole area of consultative commerce. So if you're buying a home, or if you're buying a luxury item, or if you're buying art, if you're buying, if you're buying a yacht, you're buying all these fancy stuff, expensive stuff. A lot of these items are bought with consultation with somebody. Either in the case of the real, it's a luxury manager. In the case of a house, it's a real estate agent. So all of that consultative commerce, how do you do that in a world where you can't see that person physically? I think there's going to be some verticalized versions of Zoom. I think that are going to come around, where for a certain vertical, you'll have an application that's tailor-made for that consultative commerce experience. So I'm excited about that. And I think that can apply to investments. Maybe somebody will have an app that's built on Zoom or built on some open source that allows an investor and a founder to have a conversation before they become partners. Look, human beings are creative people. I have a huge amount of faith in the human spirit of entrepreneurship, and I know people will find a solution to this.
Well, what's really interesting, you sparked something in me, is that, we've always talked about this idea, right? You could be watching TV and you could buy what the tech has been meh. But like right now, right, if I wanted your bookcase or if your vest or your shirt, right, wouldn't that be, not that you want people multitasking, but, if you have, right, this, kind of wallet that's really easy to pay with, and, right, it starts to, right, you talk about, it's a whole different, right, because we have to leapfrog, right? I mean, China leapfrogged us, right? I mean, but this idea that, maybe somebody wants something by the artist who did my painting, right? It's a really interesting, I hadn't thought about it. I was like,
it's going to be exciting. I mean, look, it's like, TV is not better radio, right? And radio is not a better newspaper, right? So I think whatever that next generation of immersive commerce that's going to happen is not going to look like e-commerce 2.0. It's going to look something very different. It's going to be totally different from a ground up. But when it arrives, it's going to blow our minds. And look, that's what dreams are made of, and that's what Silicon Valley is made of, and that's what I'm excited about.
All right. On that note, Keval, thank you so much. This was, as always, incredibly informative, and we really enjoyed having you on, and hope to see you again soon.
Thanks for having me, and thank you to our audience, and wish everybody the best of health, and have a great weekend. Thank you.
Great. Thanks.